First up, we've got Dale Henderson from Pilbara Minerals. Dale's presenting for his first time here at Diggers and formally commenced as MD of Pilbara on Monday. You can read about his bio on the website, but I thought I'd tell you guys a couple of fun facts about Dale. In a previous life, Dale enjoyed mountaineering and has climbed in the Himalayas and New Zealand. He's also dabbled in some ultramarathons. Now life's a bit busy and different. He looks after 3 chickens and enjoys spending time with his amazing wife. So please welcome Dale to the stage.
Thanks very much, Paul, and I'll be telling my chickens that they featured as part of my intro when I chat to them in the coming days. Yeah, absolutely delighted to be here. Thank you to Diggers and to Canaccord for having Pilbara back, and really excited to be here. And yeah, first Diggers conference for me and newly minted MD for Pilbara Minerals, taking over a course from Ken Brinston, who's being the former MD and CEO for Pilbara, has been an absolute champion. 6.5 years at the helm, he stewarded the business from, as he would say, at the tin shed in Fremantle to an ASX 100. So incredible growth chapter Ken's led, and I'm absolutely delighted to be carrying the baton forward. So looking forward to what lies ahead. The lithium market is taking off, and Pilbara is positioned like no other to capitalise on this market dynamic. We've got an operating platform which is delivering well. We have a massive organic growth profile ahead of ourselves. We'll be looking to double our production run rate in the coming 18 months to 2 years. And we're moving into chemicals and starting to generate, well, we will be generating additional value through that for our shareholders. So the sum of the above things means we are incredibly well positioned to enjoy the growth of this amazing market that we're seeing unfolding. So what I'll be taking you through is a look back of where we've come from and a look forward. But to start with, the disclaimers are available on our website. To start with, this is our snapshot of where we are today. ASX 100 company, $8 billion market cap, $874 million cash in the bank, and we've just had a huge quarter, our biggest quarter thus far. Now that $874 million, I draw your attention to that. $500 million worth of that was generated in the last quarter, a quarter which was a ramp-up quarter for volume, a quarter where pricing was improving, a quarter where there was CapEx going out the door, and of course there was COVID, which we've all had. So one hell of a quarter, and if that's a sign of things to come, look out, Pilbara is going to be going places. So where we're located, we're in WA, 160 k's, thereabouts southeast of Port Hedland. Tier 1 asset, I've heard that a lot through Diggers, but we have a Tier 1 asset. 2 plants, being our Pilgan plant and the Nugajoo plant. The Nugajoo plant being formerly the Altura plant. Production run rate's approximately 580,000 tonnes. And as to mine life, we've got 26 years plus, and that's on the assumption that we're running at the 1 million tonne run rate, i.e. we've completed all of our expansion. And plus 26 years assumes no more drilling, which of course we're going to do. So we're poised to have a big operation for a long time yet. Now for a bit of a look back, the story of Pilbara is a pretty amazing journey, and I'd like to actually start way back. So it's 1985 and 5 geos got qualified at the WA Institute of Technology. 23 years later, 2013, John Young and Neil Biddle got together, formed Pilbara and started the exploration on the hunt for tantalite. They pulled back the overburden and found the large pegmatite seams, of course being high in hosting lithium. 2015 they went to the World's International Lithium Conference, hosted in Europe, attended by 100 people. And there they heard from the key consumption buyers at that time, being the ceramics industry. The ceramics industry said, gee, we're a little bit worried there's this thing called the lithium battery. We think that demand's going to increase. This might be a problem for us. So at that point, John and Neil realised that they were potentially at the toe of a whole new industry and a whole big emerging demand set. So later by 2015, those other geos, the 5 geos who graduated together, were all hipped up together, doing what geos do, which is drill the resources out, and boy did they drill. By 2016, Ken had come on board to lead the company through the financing and get the project built. And in short order, Alex Eastwood, our General Counsel, Brian Lynn, our CFO, joined the team, and they went off and raised the money. They couldn't raise the money in Aussie. No one would have a bar of it, and they had to go to the international markets and raised through the Nordic bond market, 100 million US bond. I would just add that was cornerstoned, however, from Clean Energy Finance Corporation Australia, so a big shout out to the Clean Energy Finance Corporation. It's always supported Pilbara, and that was actually where the roots of our sustainability journey actually started with them and the requirements they asked of us as part of financing. So fast forward 2017, I'd come on board as the COO with the mandate of getting the project built, operating, and then expand. And by the time we'd just got the project built, the downturn had started, and we had a 2-year downturn in the market, which was incredibly tough for all participants. But that 2 years was important for Pilbara. It was a 2 years where we really improved. We had to drive costs down, lithium recoveries up, and so there was a formative period of the business's journey where we had to focus on getting really, really good, because if we didn't, we wouldn't survive. And fortunately, we did survive, and so coming out of that period, we also did a refinancing, which was frankly transformational for the business, moving from the Nordic bond to conventional project financing facility. And then by late 2020, the Altura operation next door was running out of rope. So we were fortunate in acquiring that, and that completed early last year, and thus since that time we've been focused on ramping up both operations to full extent. In our spare time we did the POSCO joint venture, which we're delighted to be underway with them, and we've done the BMX platform as well, which I'll offer a bit more insight to those things in a little bit later. So hell of a journey to date, and as the key takeaway for this would be to say, as tough as the journey is, having fought our way through that period, the business is incredibly well placed. We were early to the party, but because we were early to the party, we're now in this enviable position to capitalise on the market which is unfolding. So speaking of the market, it's great to be in lithium. The pricing has absolutely rallied, of course, in the last 12 months and appears to be holding pretty strong around $70,000 per tonne or $70 per kilogram. And we don't see any signs of this changing in the near term. In the contrary, there's a lot of good signs around strong demand continuing to unfold. So what does the outlook look like? Well, our friends at Benchmark have shared their latest view, which you see before you. My comments on demand would be to say, yeah, demand is absolutely incredibly strong. You know, we read the headlines, as does everyone else, around the developments in the industry. Notable ones in the last month have been Volkswagen commissioned PowerCo, being their separate entity for the purpose of getting the battery materials and building the batteries and delivering those to Volkswagen. So $20 billion Euro investment bucket to be delivered between now through to 2030, which contemplates 6 battery plants in Europe and potentially some in South America. And they've already done the groundbreaking for that first battery plant. Ford Motor Company has been cutting deals left, right and centre, which I'm sure you would have seen. And then POSCO, our joint venture partner, in their quarterly call the other week, discussed their 6 trillion Korean won investment, being 4.6 billion US in battery materials. Again, all to be spent by 2030. And if that's not enough, then you just have to look at how the EV sales are going. June EV sales for China were a bumper month, 500,000 EV cars. So demand side looking very, very strong. So then the question is supply. And yeah, what's notable about the supply equation is, frankly, we need everything if these demand curves are to be true. 18 Pilgangoras are required by 2040, or 9 Pilgangoras approximately by 2030, the next 7 years. It took us 4 years from first drill hole to production for our asset, and of course we're still on the build out and ramp up. So I think, I think we're just incredibly well placed, absolutely incredibly well placed. So strong demand, and I look forward to seeing the market unfold. So don't believe everything you read from certain particular investment bankers as to the market outlook. Okay, moving to the operation, bumper quarter, 56% increase on the prior quarter due to bringing on the Nuggaju operation, the former Altura operation. So really happy with how production's going. And a big shout out to Simon Coyle, our site GM, and all of the operating staff who have been toiling away, bringing that operation up, and of course contending with the COVID challenges which we've all had. So strong production, and that will continue. Moving to pricing, pricing has been very strong, and the quarter we've had improving. We've had a lag in our offtake pricing, which is rising following the market. And then there's the Pilbara Minerals Battery Materials Exchange, being our version of eBay for battery materials. And our latest auction, which we did yesterday, has been added to that curve. And what you can see is the Battery Materials Exchange is realising a significant premium above the average market pricing set. And what that speaks to is really two things. One is it's about there's absolutely strong demand out there. And two, the existing market is not as efficient as it could be. So the use of the BMX platform provides an efficient marketplace for buyers and sellers to come together and trade it out and win for the highest bidder. So the results speak for themselves. And as we think about the year ahead, with the Nuggaju plant now moving to nameplate, we will have more tonnes to bring to market. So the BMX could be a likely avenue for that. So volume times good pricing equals balance sheet happiness. 874 million cash in the bank. I have the happiest CFO in West Perth. I'm sure of that. Brian Lynn, if anyone knows Brian, and his team will vouch for me. It's a CFO's delight to have to be printing these returns at this point, and we look forward to, touch wood, many quarters to come in the same vein. Now, beyond our base operation, the best thing we can do to create more value is just grow the asset that we have, given this incredible asset we have. So we've got a staged production profile comprised of the base operation, which I mentioned being at a 580,000 tonne rate. We've got the next incremental expansion bolting on another 100,000 tonnes, being the P680. That FID was approved last quarter. The board's instructed us to drop the clutch, get going and get that built. So the team is working feverishly to achieve that aim. And then beyond that, we've got the P1000, which is to take us up to 1 million tonnes per annum spodumene concentrate. FID for that project is targeted to be before Christmas in the December quarter. So what you see is a pictorial of those projects which have just had FID. On the left-hand side is the P680, bolting on the 100,000 additional tonnes. And on the right-hand side is the P1000 integrated crushing and ore sorting facility. And important to note that the P1000 investment case will be in two parts. This is part one, being the front of the circuit, crushing and ore sorting. The second part will come late in the year, in the December quarter, being that FID I mentioned a moment ago. I'll also note that crushing and ore sorting circuit size for P1000, that'll be the largest integrated crushing ore sorting circuit in the Southern Hemisphere. So it'll be a big beast, fully integrated with ore sorters, and looking forward to getting that built and operational. So beyond growing the base asset, the other priority we have, which we progress in parallel, is diversification, but diversification through adding more value through chemicals participation. And two pathways we have in train for this. At the right-hand side, it's about lithium hydroxide, lithium carbonate. In the middle, it's about Midstream. What Midstream is the production of a chemicals salt to use in lieu of spodumene concentrate, a high-grade lithium salt, and transport those lithium markets utilising that salt. And I'll offer us some comments on both in a second. Starting with POSCO. Yeah, the POSCO joint venture consummated, underway, and this is an absolute coup for Pilbara. POSCO has been in lithium for 10 plus years. They are very ambitious about their plans around their participation in the battery materials industry, and we are their supply partner for the plant they are building in Gwangyang, South Korea, a 43,000 tonne lithium hydroxide plant located in Gwangyang, South Korea. Gwangyang, POSCO owns the town. It's where one of their major steel plants are. The pictorial you see there, it is as it shows, adjacent to the water. What's in the background there, the big white building, is actually POSCO Chem, which is built and operational, producing cathode active materials. So they're well underway, and of course, being located where it is, it's at the doorstep of SK Innovation, LG Chem, EcoPro, all the established participants in the supply chain. So great to be involved with POSCO, and Pilbara is there, partnered with them, with the opportunity to be a 30% economic participant. So we look forward to obviously earning money for our shareholders through the spodumene concentrate, but then adding to that through the chemicals participation. So delighted to be partnered with POSCO and looking forward to seeing that project unfold in due course. Midstream, as I mentioned, is the production of a lithium chemicals salt. And this project, it's an R&D piece of work that we've been working on for a good 18 months to 2 years, and we like what we see. And in a nutshell, the production of the salts achieves several aims. Firstly, it's a much more higher concentration lithium carrier in the order of a 6-fold multiplier compared to spodumene concentrate. Secondly, spodumene concentrate has a large component of waste which comes with it, being alumina silicate, in the order of 97%, which is a massive component. Well, Midstream leaves that waste at the mine site where it's more readily handled. And lastly, and most importantly, the process path we've explored here is to deploy electric process steps, specifically an electric calciner, which therefore enables us to drop down that carbon intensity curve. So we've partnered with Calix to achieve this aim, and test work's well progressed. We completed a scoping study, and we're now into that next chapter of study heading toward the demonstration plant, FID. I'd also add, in the last quarter, we were successful in securing a $20 million grant, federal grant fund. So a real coup for the project and the team, $20 million being the maximum award value that was available under that scheme, and secondly, nationally contested, a big vote of endorsement, and obviously a big lick of cash to go towards that demonstration plant. But just to fill the picture a little bit more, I do want to offer a little bit more colour on the existing spodumene business, because this reinforces why we are pursuing Midstream. The existing spodumene business, what we send out the gate is, by a lithium metals basis, only 2.8%, so not a lot. And then what's left over, the 97%, well, it's not actually wanted by the customer, effectively. So having visited the chemical plants in China, there's 2 sheds. There's the shed where the spodumene concentrate comes in, and there's the shed where the alumina silicate, the 97%, goes out. Both those sheds are the same size, and that alumina silicate has to go somewhere. Secondly, that spodumene which heads into their plant goes through the big rotary kiln calciners, gas-hungry, coal-fired, incredibly energy inefficient and carbon intensive. For contrast that back to what we're pursuing here, that big calciner, it's electric. That alumina silicate waste stays at the mine site. What heads out the gate? Bulk of bags of salts. So we think it's a winner. More work to be done. It's R&D, but we think we've got to move the cart forward and forge a path here, because like all industries, the lithium industry has a lot of work to do to reduce our carbon intensity. Now, if we can get this right, we're pretty excited where we might be able to take it. A high concentration lithium product would be able to, of course, access markets more easily, reduce the reduction in transport costs and the like. It looks like a very, very sensible pursuit, and yeah, look forward to progressing it, and we'll see how we go. And the Midstream project, I'd also add, it's probably our highest priority sustainability initiative. If we can progress and develop a better product for market that materially drops down the carbon intensity, well, we're tackling those Scope 3 emissions, and we're tackling a big problem that the industry has. So it's our highest priority project, but we've got a couple of others I'd just like to share as well. The first being the 6 megawatt solar plant that we've talked about for some time. That's deep into construction. Those photos were from last week. And before anyone asks, yes, we know that the panels are facing each other. It's not meant to be that way. Someone said, is that for sunset and sunrise? It's like, no, it's under construction. It's okay, relax. But delighted to get that underway, and this will be a direct displacement of carbon energy. And then the other project we're pretty excited about is Australia School. Australia School is a remote Aboriginal school not too far from the mine site. They approached us for help, and they said, gee, we'd really like to get some solar. We run these diesel generators, it costs a fortune, can you help us out? And we said, well, of course. But we took it one step further and said, look, you really need some lithium batteries, and that's what we're going to do. So we've partnered with Pacific Energy, who's building our solar plant on site. We're going to deploy a lithium battery solar solution, and we think it's going to be really neat. The cost of that diesel out to that school it's expensive because of how remote it is, and of course that saving can go back to the kids and back to buying materials and other support for the school there. So really, really delighted to be supporting that project locally. So look, to wrap up, the lithium market is absolutely taking off. It is the birth of a new industry, and that story of 2013, John Young, Neil Biddle, getting that insight, it is unfolding. It is absolutely unfolding, and Pilbara is positioned like no other to capitalise. An existing operating platform that's shooting the lights out, care of a focused operating team that earned their stripes through the downturn. We've got an enviable growth pipeline that we're unfolding, building off an existing operating base that contemplated expansion in mine. And in parallel, we're getting on with chemicals participation, which is going to enable Pilbara to deliver more economic returns per lithium unit to our shareholders. So absolutely incredible position to be. I'm proud of the team, I'm proud of the journey, and absolutely excited to be the new MD carrying the baton forward after the incredible work Ken's done. And so thank you for your time, and welcome if we've got time for any questions.
Yeah, we do. Please thank Dale, first of all, guys. We do have time for a question. Is there a question in the audience for Dale? That's great, because I do.
It's not a climate
I was doing some maths here. So 874 million of cash. That's a very enviable position. And then your expansion's about 300 mil. So you've got over 500 mil of cash left over. What do you do with it?
Well, it's a question we get asked a lot.
Yeah.
And we will have a capital management plan communicated to the market before Christmas as well. A lot of promises around Christmas. But as you'd expect, our focus is really what we've got in hand. The capital expansion, the first instance, the Midstream project. We've got a joint venture with POSCO, and depending how we go, we might have more left over, or we should. Yeah, but we'll see how we go.
We'll call it working capital buffer.
Sounds good to me.
All right, great. Well, look, ladies and gentlemen, please thank Dale for a very entertaining presentation about Pilbara Minerals. Thank you.
Thank you.